All right, well, good morning. So this morning, E-mini has had a decent rally up. Now we are starting to find some consolidation and starting to get some more sideways movement. I think this is a pretty natural transition that's happening. So I'm going to type this on the board here. Each day has three phases. It has the open, the middle of the day, and then the close of the day. So each phase is either a trend or it's a trading range. And often what will happen is these will, as it transitions from one phase to another, like from the open to the middle of the day, it'll transition to a different something other than what it has been. So we've been trending on the open. Now as we go into the middle of the day, we might have a trading range here for a few hours until 1:30, 2 o'clock, and then the end of the day might start trending again. Anytime you're starting to see these bars overlapping like this, like 3, 4, 5 bars overlapping, small bodies, big tails, then I think it's good to just go ahead and, you know, take your hands off the controls and uh, let the market figure out what it's going to do. You know, you can really get mixed up trying to take trades in here. Now, what high frequency traders are doing is they're buying and selling all through here and taking little scalps and, you know, one tick, two tick, 1 point profits. You know, but that's what they're doing. We're not doing high frequency trading. You know, you could call this a triangle. Now, I kind of just expect there to be a few more overlapping bars, but with the triangle, normally there'll be a breakout of the triangle, and then that breakout reverses back into the apex of the triangle, and then from there the market either continues or it goes the other way. So if it breaks down below, we would expect it to test back to the apex, and then it would either continue or it would reverse up. The open had a bit of a wedge pattern. We had a, I'll draw it in. We had three pushes here. This first bar, then this, and then this bull bar. Sort of a wedge pattern. Not a good enough bear bar to be getting out below it. However, second attempt up, Then you get a bear bar, then a second bear bar with a better close. It's closing lower on its lower to its midpoint. So I think that would be a good place for bulls to get out. So if someone had bought through here, I think you hold through this, but then you get out below this bear bar. So you could also draw this wedge like this once you get this second push up. I'm going to cycle through some of the other charts and see how they're looking. Bitcoin daily chart. Look, we were starting to get a bit worried about Bitcoin as it was falling down here. To me, now this looks like it's a breakout pullback and a test of the moving average, test of the trend line. You know, I think some people there, my trend line had gotten moved down some. I think, yeah, there's where that's how I want my trend line there. So how I have my trend line drawn, that's a perfect test of the trend line. You can see how I draw my trend lines. That's off the closes of bars. And you can see on these closes down here, like this close and this close, that's a perfect test. And then start from this first close up here and try to make it best fit these closes here. So now we've broken out of that. We've come back and tested the trend line and the moving average. And now we've gotten a good bounce off of that. So I would bet that there are swing traders hopping in here buying, going basically probably swinging up for like 90 or 100K. And if they're wrong, then they got to get stopped out around 65,000. But this is a bit different from what we've been having. We had 3 days here that were down, and people were, starting to get shaken out, starting to get scared, thinking the breakout's going to fail. Suddenly, we've had this strong reversal up, so that's very good for the bulls. Crude oil has kind of worked its way down today. Now it's below the moving average. Potentially, you could look for a short setup. We have the 200 moving average below, and the close of yesterday still below. This was the gold trade we took yesterday. Let me put it up on the chart. You can see we bought above this bull bar for a swing up. However, I didn't like this follow through we got, so we ended up just getting out with like a 1 tick profit. And then I'm glad we did, because ultimately we would have gotten stopped out down here. Look at these 4 bull bars up. This is a lot of strength here. It's better that it's 4 bull bars, because if it's just 1 bar, like let's say we just had 1 giant 5-minute bar, well, of course that's great bullishness. So there's probably going to be more up. But to me, that's not as good as it being broken up into 4 different bars, because spikes in volatility happen, and so often they can reverse. So we expect there to be more up after a strong move, but so often they reverse. However, when you get 4 bars up like this, your odds are better that you're going to be able to have more up and be able to get a scalp out of it. Because not only did the bulls own the price, so they owned that increase in price, but they also owned the time. So instead of it just being 1 giant bar where the bulls would just own like just 5 minutes, the bulls here owned 20 minutes, which to me increases the chance that we'd be able to get more up. So like Also, it closed above this close. We didn't go up and then close below it. Had two consecutive bars closing above the moving average. So for all those reasons, to me, it looked like there'd be more up after that. And how I would the area that I would expect it to go to. Um, I mean, that's the measured move out that I would draw in. I don't know. That might be a bit much for that to get to today, but whenever I see something like this, and this is the way I draw my measured move. I draw from the open to the close of the spike up. And then once you get like this fourth close, probably this third close is good enough as well. But once you get this fourth close, you can buy the close. You can buy below the first time it goes below a bar. And you can see, this was a good bearish signal bar, but it ended up being bought. Looks like what we've got here is just a second leg off of this. So we had 5 bars down here, and a couple pullbacks, and then a little bit more down. All right, I was talking there for a bit. I had my mic off. What I was saying here, we have this wedge, this three push pattern, and after a wedge, what the bears are looking for are two legs back and about 10 bars. And so we've gotten that here, and that's kind of the minimum that we want to look for in a pullback before trying to reverse. So now the bulls know that we've gotten these 10 bars and two legs. And I'll draw the legs in here. So that's about a perfect second leg down there. And what I was saying was, at this point, somewhere in here, it might be, let's just call it 50-50 that either the market's going to break out down here and head lower, or the bulls are going to come back in and start buying through here, and they're going to try to get it back up to 5,900. So we could call it 40% chance that it's going to try to make its way back up here. If it's going to do that, it's probably going to happen pretty soon. So the market's probably not going to go too much lower before trying to attempt up. So what I was showing was, you can go down to a lower time frame like the 2000 tick, and you could buy above a bull bar, something like this. And that 40% of the time that the market reverses back up, you can buy above this bull bar, put your stop 2 or 3 points below, and then you'd be swinging up for more like 20 points. So to me, that's a trade idea. That's something you can kind of look for as you get more experience in trading. When you can tell that the market has a good chance of reversing up, and you can tell kind of when it's going to reverse up. Like, after this wedge, we've already met the pullback amount, and so somewhere in this area we'd be looking for that pullback to end and for the bulls to step back in and start buying. So by knowing that, we could look for a small bull bar to buy above and then try to go for a swing up. But maybe 60% of the time it's going to continue down, so you get stopped out. But probably about 40% of the time you'll be able to at least get some sort of move up. Like the bulls will start buying through here. I've been talking about being long, but after we have had this several consistent bars here, I think it's also reasonable to look at being short. So at the same time, you could be looking for shorts below the moving average as we go down. I think the bulls need to do more buying before we can really test down. I understand that we had this opening reversal, but because of the wedge, I feel like the bulls will step back in at some point, or they'll at least attempt to step back in. So I'm not too eager to just start selling yet. So crude just saw a big spike here, That's it's about a 1.5% move in 15 minutes. So I would expect more up for crude. Let's see if I can find a similar spike up, something like this. This is similar to what we've had here. So someone bought this close, and then they could have scaled in through here and gotten out on this bar, or they could have bought here, waited and bought lower down here. And then, ultimately we had a bit of a trend up after that. Let's see if any other commodities were affected. So not really. I am interested in watching gold with his measured move. I'm not married to the idea that it's going to get up here, but I think as we go through the middle of the day and we start to transition into the end of the day, gold might try to make a move up to get to there, and might be able to hop in above a bull bar, try to buy and get up to that level. So it's probably going to be, if the bar closes near this low like this, it should be okay to sell the close. I would expect there to be more down after this, 7 bars like this.
Order submitted.
So after like 7 bars like down like this, stair stepping down, I would expect there to be sellers above that bar. So we have a gap here, this low and then this high do not overlap. So something I'll do is draw a measured move from up here to where that gap started right there. That puts us down here. We'll see. This could be the start of a bigger move down. So we had this wedge pattern on the open that's reversing. Then look at where we've had other wedges. This was a wedge pattern on the open. 1, 2, 3. Then we had this huge sell off. I don't expect it to be the same ratio of a sell off here. Like, you know, this sell off is 4 times or so larger than this. I don't expect that. But I could see it. I could see this coming down to near these lows here or here. I think there would have been sellers above this bar. It's going to be sellers above this bar too. I'm not too interested in selling so far below the moving average like that. You know, someone might be saying, like, wow, what was the news? What happened to make this happen? Well, they're and you know, the TV might associate some news event with this, but you know, this is not news. Nothing in here has to be about some event that happened. Market came up, it rushed up to test 5,900, and it found more sellers than buyers there. You know, the buyers wanted it to go there and continue up, and it didn't. We got a sort of a head and shoulders top here, and now the buyers are stepping aside because they don't like how the market's reacted to it. So there are more sellers than buyers, which is pushing this down like this. I will leave my limit order here in case the market pushes back up. Then I'd be okay selling there. But I'm only going to wait for one more bar. So if it doesn't like pop up there quickly, get short there, then I'll just go ahead and remove it. Just gonna peek over at crude and gold here. Crude, we were looking at like, so we have these 5 bull bars up. It's probably going to be more up still. So look at what kind of pullback you might have to sit through. You might have to sit through something like this, where it pulls back, where it retraces most of the move. It might just continue up here, or it might retrace back, and then if you're buying, you'd have to stand against that big pullback. So like I would be interested in getting short on this bar, but I'm not gonna. Let's say the bar closes like this. I'm not gonna be holding my short above that because I want to be selling above a bull bar possible reversal. So it looks like it might get it here. I'll just try to go for 2 points. So it's testing my limit order. All right, so came right up and tested it. Did not get filled. If
Order
it would have,
canceled.
I would have been stopped out already with a profit. So, so basically missed that trade. So I'm not going to hold it there because the trade's already been made. The scalpers already made their profit there. I'm surprised I didn't get filled because I had that. I had that when this bar closed. So then you had this bar, which is 5 minutes. Then we had 3 more minutes here. So I thought I would have been earlier in the queue. That shows you how many people had a sell order above that. Crude oil. So the way you trade it after this spike, you'd probably go ahead and get out below a bear bar like this. But then a bull bar, you'll buy above it and try to swing up again. So if I was long, I would get out below a bear bar like that. The benefits of putting your stop below that, one, in case this fails and it just crashes down, then you're stopped out with a small loss. Second benefit is that it might not come back down below that. So, you're kind of hedging you're insured against a big loss while also allowing yourself to still take profit in case it just goes back up. So you could get out at the close and you wouldn't take the big loss, but then you also wouldn't stay in the trade if it ends up just going straight up from here. So gold, the bulls bought it up to this level, and bears keep attempting to bring it back down to this level. So possible swing set up here. If we can get another good bull bar. I'm eager to see what happens when we get to the open of the day, see how the market reacts to it. And I think that'll tell us a lot if today is just going to end up being a trading range day, or if today will actually be able to sell off from here. Let's look at where the open of the week is, because today is Friday, so the open of the week is an important price. Yeah, so the open of the week is up here, right at 5,900. So if we look at the daily chart, So so far the so we opened here and we can scroll to the right and look that so far the market has been below that price. So right now the weekly chart is um, it's a doji bar with a small body, a small bear body, and a larger tail and bottom. So at the end of the day, right, the bulls will want to try to buy that up to prevent a bear body, and the bears will want to try to sell to make a larger bear body with a smaller tail on the bottom. And then let's say the bears end up being able to sell off here and we do go lower. Probably in that last 30 minutes or so, the bulls will try to make a rally to create a larger tail on the bottom of the bar. And they'll do that to decrease the chance of selling happening next week. So the larger the tail, the less eager people are to sell below the bar. So the crude, I'd definitely be out below that bear bar. The thing is, you can always buy again above bull bar. So I mean, if this market's going to be going up here, then you'll have plenty of chances to buy. So I think it's better to avoid this big downside risk. Yeah, there's a lot of buying here. We expect more up, but that doesn't always happen. And when it doesn't, you often get a bigger sell-off. Bull's trying to create a double bottom here. I mean, I would hold off on buying above that. We're below the moving average. We're getting. I think the bears still want to test lower. They want to see what's at the open of the day. We have this measured move that's a little bit lower. So high chance market's going to test this open here. So I'm looking back at what I have written on the chart here. Each day has three phases. They open, the middle, then close. Then each phase is either a trading range or a trend. So to me, it looks like this was the open, which was a trend. And then the middle of the day is acting as a trend. We still have an hour or so for the middle of the day. So I mean, the end of the, what's the last few hours going to be like? It's undetermined. I think a couple chances of what's going to happen. This sell-off could continue. It could continue down, like below the moving average. So the this line here, 5,900, that's where the market opened for the week. So bears will want to try to sell it off as much as they can, because currently they have these prices down here, which means there's a tail on the weekly chart. So right now the weekly chart looks like it opened, it went up just a tad, then it has a big tail on the bottom with a medium sized body, or a small bear body. So the bears want to sell it off more because they have a tail on the bottom currently. So I could see this heading down more, which is why I'm not interested in taking a buy on something like this. This is just a first double bottom when there's still targets below. What could happen is that the bears will try to go lower, but then they're unable to. And then I could see there being another leg up. Maybe something like, it might look something. It might look something like this. Bears are trying to go lower, and they try to break out, but then they're failing to. Then the bulls take over and end up having a bit of a swing up. So I could see today having an up, down, and then eventually going back up. I could see that happening today. So bear bar closing near its low. We're starting to get these overlapping bars, so it decreased the chance of me wanting to look for a short. I think let me just take a lot of this off the chart. If I just look at it like this, I could see this market falling down. There is a 200 moving average in the close of yesterday that's going to act as some sort of support. But from here, I could see this being worth taking a swing for like 3 times your risk, 4 times your risk. maybe like a 5 times your risk trade. See if it really like plunges down here. I think that might be, be an okay trade to take. It's like a larger swing from this bear bar. You get a sell below it and put your stop above it. Because maybe only a quarter of the time will this actually go down somewhere down here. Gold potential double top with a bearish signal bar. This would also be okay for a swing down. Yeah, so if gold sold closed something like this, and I think that'd be okay for taking a swing to go for like 2 times your risk down here. I'd be more eager to take this short if this pattern had set up higher up on the moving average. Now I mean we're so close to this low here, and I know we still want to go down and test it, but there's going to be probably a good amount of support right at that open. Gold. I mean, I'm liking the idea that this is going to go down here, but now this bear bar is getting too large. I was wanted to be smaller, so my risk could be smaller. Now it's kind of taking up too much of the runway here. All right, so that short idea on the E-mini is off because we're not going to get a bear bar. So, we're getting this double bottom, triple bottom. There's a fair chance that this will just go up a little bit here and then continue to just reverse down. So it probably wouldn't be unreasonable to be looking at the tick chart to look for like a bear body somewhere up here. And then when you get a bear body, you just short and try to go for a swing. So you risk 2 or 3 points to try to go for 15 or 20 points. is there will be some bulls buying now above this. They'll be buying above it, and if they're unable to, if they feel like they're wrong, then they're going to start getting out around this area. So if it's going to go down, it's probably going to start going down pretty soon. Which means to me, like I was saying, like you look for a bear bar on a shorter time frame, and you can kind of reduce your risk while maintaining the profit potential from a swing. Yeah, gold. I was interested in shorting here because of this potential double top. You know, the bulls were working up, but then we got this wedge pattern, which is a reversal pattern. First push, second push, third push. So we expect to move down. And then now you see the bulls are trying to go back up here and here. So if they're failing, I'm interested in getting short here. However, this bar got too large, and you know, I want to be selling up here so that I can have this room for profit. I don't want to be selling here because my risk is greater, my reward is less. So if the market's going to go down, it's probably going to go down soon. I just think it's logical. So, you know, something like a bear bar like this. So you risk 2 points, and then you go for like 15 points. So you'd be trying to go down to this moving average. So I think that's a trade idea, and you know, if you're comfortable with trading small, I think that might be a a good trade to be taken there. You know, I think just from my experience and logically, the market's either going to make a reversal up here, or it's going to continue down. And if it's going to continue down, it's going to happen pretty soon after this. You know, we're not going to pull up too far up here and then head down. I think if we're going lower, I think we're going lower now. I'm just going to peek at the 15-minute chart just to see how that looks. So it's a V top, 4 bars up, 5 bars down, fairly tight leg up, fairly tight leg down. We've got this inside bar. So this bull bar is inside of this bear bar. So first breakout of this area will probably fail, whether it goes lower or higher. It'll probably fail and have to reverse back before continuing. An example is this. Here we have an inside bar. This bull bar is inside of this first bar. And what the market did was it broke out, and then it came back up into that area, and then it continued down. So that's kind of how inside bars work. It's not always going to be the case, but all right. So 15-minute bar closed. So we got another inside bar. So that increases the chances that, because now it's acting as a triangle. Something like this. In a triangle, we do expect the first breakout to fail and then to reverse back before continuing. looking at the gold chart, looking at the crude oil chart. So earlier I was talking about these 5 bars up. You could probably buy. However, once we started to get this second bear bar here, I was saying you should be getting out of your longs. Then especially out of this third bear bar that's closing near its low, you should be getting out of your longs. 2 reasons. One, if it's going to go up, you'll have an opportunity to buy again and then take advantage of that swing up. But if it's going to go down, then you might as well get out, because to avoid big pullbacks like this, or potentially this will just keep going down and break out down here. Like this was just a bull trap, and now the market's going to rush down here. And you want to avoid those big pullbacks, those big losses. So after you get a spike up like this and bad follow through, just go ahead and get out after the bad follow through. And if the market is going to come up here, then you'll have opportunities to do that. So go ahead and just manage it. Keep your risk small. Also, by putting your stop below something like this, it's not always going to get hit. Putting your stop there does not mean 100% it's going to get hit. Sometimes you'll put your stop there, and won't go lower. It'll just actually just continue up. So that's kind of, sometimes you get lucky like that, but that lets you manage it lets you maintain your profit potential while also managing your risk. Avoiding. So like if I had bought up here, I would have sold out. I would have sold my longs below one of these bars, and I would have avoided this. Like I was showing on the 15 minute, you can see the triangle on the 5 minute as well. It's gonna be something like this. So the first breakout here will probably fail, and it'll come back into this range before heading off. If you guys have any questions, go ahead and type it in the chat. I'd be happy to answer. Or if there's any topics you wanted to talk about, let me know. So I think if the market's going to go back up, it's probably going to go up in a fairly tight channel. Probably not as strong as this, but probably something more, something less aggressive, something more like this. It'll go up kind of like this. There's going to be some little pullbacks in it. But I've seen days like this where you'll have a strong leg up, strong leg down, and then in that last few hours, it'll have another leg up. So effectively, it became a trading range, but you had these swings throughout the day. Now I also can see this working down, down to like below the moving average here and below, or at least testing yesterday's close. What the bulls are trying to do right now is they're trying to find buyers. Triple bottom, probably some buyers above that. Now we've had 3 bull bars in a row. So bulls are trying to consolidate, like they're trying to accumulate their buying. They're trying to keep the market from falling down. They're trying to create that leg up like I'm talking about. However, if they can't, they have all this buying that they've gotten here now. and then all those buys will have to start getting out if the market starts turning over and starts going down. So, we're I'm not interested in taking a trade yet on this, but once we start to see that there might be bulls are taking over and going up, or if the bulls are failing and then bears are taking over, we could get short. So, just gonna sit on our hands for now. What's your setup and entry model? Let me so we have the Discord here, and on this I kind of talk a lot about the different trades that I take. So if you're interested in joining, that should be, to see. That's in the description of this video. And I have other videos that go over some of my different types of entries. Basically, I have two different ways that I trade. One is where I use a small position and I do scalping. So, what's some examples? So, I'm trying to think of the trades I'd taken here. So, an example of a scalp. I'm just trying to think of the best examples. We have all these different markets up now that I did one on crude that I liked. It was buying through this. So when I see consecutive bars up like this, there's going to be at least a little bit more up. So I'll usually buy on a pullback, or I'll buy that close, and I'll just get out for a scalp. Just a few ticks. Like if it was the mini, I'd normally go for 2 points or 5 points. So I'd buy in that pullback and then let the market ride up a little bit more and just get a scalp profit. And then if it goes down, I'll usually scale in and buy more lower, and then get out. So like if I had, let's say I had bought this close, then I might add on 2 points lower, and then once it comes back up, I'll get out, break even on my first trade, and with a profit on the second. Or let's say I'd bought this close, and I felt comfortable holding it through this, then I would buy this close, I'd buy more at this price, above this bull bar, and then get a profit on the second trade, and try to get out break even on the first trade. So that's one method of like I'll use a small position size for that. A second one is the second way I'll use a small position size is after. So this is kind of similar. Like after a several bars up, you can see all of these lows are above the prior lows. So this market has just kind of been stair stepping up. These bottoms are just all higher than the previous one. When you get that, usually the first one gets bought. So after like 5, 6, 7 bars up like that, bull bar, first one gets bought. So I'll put a limit order to buy below that. I'll get filled, and then I'll just get a scalp profit. And I tried to do that today on which market? Yeah, it was the mini. I'm not sure if you were in the stream at the time, but we had this sell-off through here. We had the sell-off here. We had this stair-stepping pattern where the highs were below the prior highs. And so I tried to sell above this bear bar. And you can see the market, it came right up to that. It touched my limit order, but I didn't get filled. And then, I would have gotten a scalp down here. But I just didn't get filled, and that happens. So those are the two smaller position size trades I'll take. Then I have my main trade, where I'll trade a much larger position size. And that is more based off of it's more based off having like a strong candle, and with the context being good for a move. So something like this. So the market is working up, and notice I could be taking the little scalps in here like I was talking about, but then where my full position size would come in would be something like above this. So I'll mark this here. We're having this V bottom. The market is clearly working its way up. We've had this strong move up. The bears are trying to go lower, but they can't. They're failing to go lower. We're getting tails on the bottom of bars. We're staying above the moving average. And then you get a good looking bull bar like this. Then I'll usually go for like a full position size, and I'll buy above that. And I'll just go for either a swing trade. So I'll try to go for 2 times my risk up, something like that, and put my stop low, or I'll go for 5 points. So if I was buying above that, I'd probably go for 5 points. So I'll just get out somewhere up here. And so what is so if you were wanting to trade like that, what is a full position size versus what would be a scalp size? The scalp should be about 20% or less of your full position size. So if your full position is 5 contracts, then you should be trading with 1 contract or less if you're trying to limit order scalp. So like when I was trying to sell above this bear bar here, I was just going for 20% of my full position size. And then that's a very brief explanation, and there's more types of trades that I take. So if you're interested in more, I'd just check out we have plenty of videos that you can check out, and of course if you had more questions, just let me know. But a lot of those videos will be able to give you more in-depth answers than because it's multiple strategies, it's multiple ideas. So so structure based around larger candles. I see you have some EMAs up. How are you using those as confluence? So I'll definitely answer that. I will say, if you check out, I have a video called Magic Moving Average. That video's gotten a lot of great feedback. That's helped a lot of people. So check out that video. You kind of had 2 questions in there. One about larger bodies. I'll start with that. So when we see, I'll talk about, we have a couple examples here. First, let's look at these 4 bull bodies. The bulls owned both the price through this, so they owned the buying. They were able to buy it up 20 points here. They were owning that what the market was doing. They were also owning time. So each bar was 5 minutes. So for 20 minutes, there was consistent buying. So bulls are in control. So when you're seeing them owning both time and price, sometimes they'll own one or the other. But when they own both, to me, that's a real good sign there's going to be more up. So yesterday what I did, and I posted this in my Discord as well. So after they got this bull close, so yeah, these are larger. So I like the candles not to be too large. I just like them to be decent size, closing near their highs, and consistent. So after this bull close, I put a limit order back to buy. I bought somewhere here. I should have held for 5 points either buy for 2 points, or I think I was going for 5 points here. I ended up wimping out, and I got out after this bear bar, so I got a small profit instead of like a 5 point profit. But that's the idea. So like after consecutive strong bars up, I'll buy on a pullback, and try to go for 2 points or 5 points. Now with the moving average, I could basically, I can go very in depth with it, but I could also just explain it in like 30 seconds. So basically, if the moving average is moving up and the market is staying above it and you're getting bull bars, buy above a bull bar and go for a swing. So market's here, it's got above the moving average here, it's trying to go lower here, can't, trying to go lower here, can't. So we have a double bottom. Now we're closing above the moving average with a bull bar. Take a chance on a swing and swing up. Over here, okay, we've stayed above the moving average for a while. Where bears are trying to go lower and they can't. Okay, buy above this bull bar or buy above this bull bar and go for a swing. And then you'll say, oh, well, you would have lost if you bought above this bull bar at the moving average. And yes, that's true. You're going to lose some, but when you win, you're going to be winning 2 times what you're risking. So if you took just a couple trades, you could have took one of these and those would have worked out, or taken this or this. So that's kind of the high level view of it. I can go much more in depth, but I would recommend checking out that moving average video first. And so the bulls have had 2 closes above this moving average. To me, that's not enough yet to just buy. It's just their first attempt up after all of this selling. All right, so the first attempt usually fails. Now I want to get more information. So really, what I'm thinking about here is who's going to fail. Are the bears going to try to go lower and fail? If so, I would look for longs. If they're going to try to go higher, let's say the bulls try to go higher here but end up failing, then I'd be interested in getting short. So kind of another, we're still kind of sitting on our hands, just waiting for the market to play out who's going to win. I want to say a reminder that this blue line is at 5,900. That blue line is also the open of the week. So as we get into the last couple hours, this blue line is going to be a very important price. We can look to the left and see all the times the market has touched this blue line recently. All these tests through here. It's been an important price for a couple weeks now. Now that we're coming up into the end of a week, bulls will want to close above it, bears want to close below it. So we could expect some odd rallies or sell-offs to happen in the last couple hours. So this is the daily chart. I'm gonna adjust it to the weekly chart. So weekly chart. Currently, the week has a bear body with a big tail on the bottom, and the bears, they want this bar to close as low as they can so they can show that they were strong and they did not allow a tail on the bottom to happen. The bulls see this, and they don't want a tail. They don't want a bear bar. They want this to close as a bull bar, because they want the market to continue up. They want to get to 6,000. So they want this week to close as a bull bar so that there be more buyers above it next week. At a minimum, they want to try to increase the size of this tail on the bottom to decrease the strength of the bears. And we have just three and a half hours left for this to play out. So, I think that's something that makes something that'll make like the Friday afternoon interesting. Is that you can, and there's a lot of opportunities on Fridays potentially for that as well. If we're somewhere down here, we might be able to try to plan for there to be a rally up. Might get a long setup, and then you could swing up, and the market will just have several strong bars up, a little rally above this. And that like the last 30 minutes, stuff like that'll happen a lot. You'll have like an end of the day give up or an end of the day rally. So I trade on one monitor. I just have one computer monitor, and I'm trying to stream as well with just one monitor. Um, so that makes it challenging having to have everything like so much on one screen, but and then also be able to present it to you guys on the stream. So I got a second monitor. It came in today. So all of that set up for next week, and it'll make the streaming a lot easier for me, but it'll also give a better quality for you guys. The stream is going to be. I'll be able to do more with two monitors. Instead of trying to have everything on one screen, I can show you guys more stuff online. We can have the chat set up better instead of me having to, do something weird with it. So that's gonna help a lot. It'll make it easier for me, and it'll be a better experience for you guys. I'll be able to actually get out more information to you guys because of that. Let's peek at some other markets here. So crude's, staying volatile after this. I think when I started to see this, I think so. I want to say like one thing. I think you could do a swing buy above this. So buy above that bull bar, put your stop below, and then go for two times your risk, 3 times, 5 times your risk, and go way up here. Anytime I start to see large bars, that ultimately you're just creating a trading range. So big up, big down. I kind of just want to stay on the side because, think about like the math behind it. If you're having large bars that are in a trading range, well, because of the large bars, your risk is large, and because of the trading range, your profit potential is small. So you have a big risk, small profit potential. It's just that's bad math there. So, that being said, I think after this spike up, we did not come back all the way down. And now the bears are probably starting to feel a bit trapped because they were selling this close, expecting just for the market to just dump down. And it's not. It's going up. So I think that's an okay swing buy. It's not okay for a scalp. You know, you shouldn't go for, you know, you shouldn't be going for like half the size of this bar for as profit. You should be going for 2 to 5 times the size of the bar as a profit. On gold, I've had this measured move drawn in here for a bit now. After these 4 bars up, I was talking about this earlier in the stream where like these 4 bars up, they were probably, you probably trade it, Ben Cruz, you could probably trade it like how I was telling you. It's 4 bars up, buy the close or buy on a pullback and then go for a scalp. And then for the swing traders, after these 4 bars up, this is how I draw in my measured move. So from the open to the close, then do a measured move up. So after you get 4 bars up like this, the odds are about 60% that you're going to get up here before coming down here. You know, as more bars get formed and we stay sideways, those odds go down. But you know, this is still a reasonable target if you can get the a good setup for it to go up there. Like by when I say reasonable target, I mean the market is aware of this measure move up. So if the market does end up kind of moving up, it knows that this is going to be a target. And so if you draw measured moves on your chart like this and then check it out at the end of the day, you'll see, you'll start to see how often it does end up making it up there. You know, it'll spend the day tricking people out like this, and then in the end, it'll kind of work its way up. So we still need more information, but it's starting to look like like we need this bar to close, and then we'll need several other bars that give us more information. But just from looking at the chart, how it looks right now, you know, the bears are probably starting to feel a little bit worried. They're starting to feel a little bit trapped. You know, they were selling these closes. They sold this. They sold this. So if you sold this close, then you got this follow through of 5 bull bars. And then you said, oh, finally we got 2 bear bars. But then now we're getting, you know, another large bull bar. Then, you know, you're worried, you're trapped. So we'll have to give that a little bit more, see how that plays out. If this bar closes like this, what some people might do is swing buy above that. I think that'd be reasonable to do. You know, it's higher probability to wait to see more bars. You know, we could wait somewhere over here to buy. Then our profit potential is less, but our probability would be higher. But you know, this would be like a second entry short. So a short here, pull back second entry short below this bear bar. So the bears are trying to short, but they're failing, which is why I would be looking at a swing trade above that bull bar. And once again, that's not you know, I say swing trade because that's what I mean. I don't mean for you to go for a scalp, like for, you know, 2 points. If you're buying above that, you want to be betting on some sort of leg, not as strong as this, but you want a leg up that's going to be going up. You know, when there's a trap, like the bears might be trapped here if it starts to go up above this bull bar. When there's a trap, you want to be, I think in this context, you want to be swing trading because traps lead to big moves down or down or up. Like here, the bulls were going up. They were buying all through here. Then once they started to see this, the attempts to go back up are weak, tails on top, and then at some point the bulls realize they're trapped and they get out, and which those bulls selling is what leads to these big bear bars down. So when they're trapped traders, I think you want to be trying to go for swings. There are strategies where you scalp, and that's kind of something else. But with this, I think your best thing to do is to be swing trading. All right, I'm gonna stay. I'm just gonna be off be off camera for a little bit, so I'll be back in a few minutes. So that swing trade we were talking about, it never triggered. The market never went above that bull bar. Now we're looking at the possibility of this being a swing trade below this bear bar. I think you could make a similar case to why this would be a good swing there. Risk about 5 points, go for 10 points. Because now you could say the bulls have made 2 attempts up, and now they're failing. I do really like that bear bar. I was pretty tempted to sell below that. But you can see what I was talking about with this triangle, where market breaks out, and then at least 50% of the time it comes back and tests the apex before continuing. Now it doesn't have to continue from the same direction of the breakout. It can either continue or it'll come back and test it and then reverse down. So I was talking about how this would probably be a good swing trade above this bull bar. I think it's still okay to take swing trades. So, I was talking about like you buy this. If this bar closes like this or better, I think you could also do a swing trade above that. Gold is probably a swing trade above this buy. And so buy above that bull bar, go for 2 times your risk. I'm going to go ahead and put an order there to buy above that. So we have, basically what I'm just seeing, double bottom at these lows here and here. Bear's been trying to go lower, and they're making all these attempts and they just can't. And then we have this We have this bull spike earlier in the day. We're still looking for it to get follow through from. So we're going to buy here. I'm going to put my stop right there. I'm going to go for 2 times my risk up. If we don't trigger on this bar, then I'm going to, I'll just cancel the trade. But if it goes up on this bar, then be comfortable being long. Looks like it's going to trigger. I might be interested in a short here as well below this bear bar. Hey Velko, good to see you. So we might have 2 trades setting up at once here. This buy here, and this short here.
Order filled.
All right, so we're filled on the gold. I'm just gonna put my stop below. Let me draw on 2 times my risk. So there we go. Put something like that. So I like that buy because I think the day ultimately is bullish. We have this spike at the start. We've had these multiple attempts to go lower through here, and the market just can't. And now we have a possible, swing buy. So I think that's good to take. Now looking at the mini, we might have 2 shorts. We might have 2 trades on at once here, because I like the way this short is setting up. Now for me, just what my plan is, if I sell below this, I'm just going to go for 5 points. Basically, I'll just be trading down to the open of the day. I'll go ahead and prepare my order.
Submitted.
At some point, the market's going to want to try to test back down lower and get to the open of the day, and potentially see if there's more down. So we're going for five contracts on the E-mini here. 5 contracts, 5 points. Look at this bull bar here. Closed above the moving average. It was looking good. Bad follow through. Second bull bar, bad follow through. Third. So they're trying to go higher, but they're failing to. And we had all the selling. Bulls were trying to go higher. They can't. We still have targets below to test. Let me peek over at gold. So gold got a good follow through bar. That's good. You can see our position size is much smaller than on the mini, so I'm gonna pay more attention to the mini over here. So I think going for 2 times your risk would be okay. Um, Also, the way the bar looks and the way the setup is, I prefer just going for 5 points and basically just a test of the open. I still have a positive risk reward ratio here, so I'm risking 3 points and a tick to go for a 5 point. So what we're wanting at a minimum is a close for this bar to close below the low of that bar. If it doesn't, then it's a bit of a concern for the trade. So mini's looking fine. Looks like both trades are looking fine, kind of just meeting expectations. Last minute of the bar. Anytime you have that last little bit of a bar, that's when you can have some bigger moves. Because, right, it's just like I was talking with like the weekly bar or the daily bar. Like on the weekly chart, the last day, both bulls and bears have goals of where they want to get to. So you can see some kind of odd rallies or sell-offs on that last day. It's the same thing on a 5-minute bar. That last minute, like I was saying, the bears want to close this below this low, and the bulls want to close it above. So they'll kind of fight over that last close. So really at a minimum wanting to close below that low. All right, we didn't get it. We closed at the low, so it's a little bit of concern. I'm gonna still hold on to the trade, wait for more information. So gold, we had two. See, this is more what you want to see. You get a follow through bar closing above the high. The next follow through bar closing above the high. So that's good for gold. We're gonna, I think don't need to monitor that too closely. Anytime you have your reward, the greater that your reward is larger than your risk, the less you have to monitor it. But if you're doing something, this is more akin to a scalp, really, what I'm doing here. I'm just going for 5 points. So I want to manage it closer. I mean, with this swing trade like this, you kind of just let the odds play out. I suspect we're going lower here. You know, we're starting to kind of stall right here, but look, we have the open of the day below. We have this big gap below, 200 moving average below. To me, the biggest thing is the open of the day. We've gone all this way. The market wants to get back and test that open. So gold getting kind of a bad follow through bar there. We'll wait to see how that closes. I think either, two things will happen today. We're either going to continue to sell off and we'll probably get below the 200 moving average and near the close of yesterday, or we'll kind of poke down a little bit, fail to go lower, and the bulls will rally into the end of the day. I don't expect us to stay in the trading range like down here for the rest of the day. I expect either we're going to break down or we're going to fail to go lower, then it's going to rally up. So if it closes something like this, that's fine. We'll just leave it on. Like I said, I do think it's going lower. If it turns into a bull bar suddenly in the last 30 seconds, I'll just get out, because I wouldn't want all that bullishness to. I wouldn't want there to be that much bullishness in the last 20 seconds. Okay, it's an inside bar. Still a bear body. Obviously, we want it to just go straight down. I think it's still okay to be holding short here. Check out gold. Big tail on the bottom. Probably good to still be holding there. Here's the breakout we're wanting. So really this should go straight down, or at least do it in 2 or 3 bars. And my biggest premise is just the market the market just wants to test the open of the day. So if it goes a little bit lower, I'll probably go ahead and move my stop to a couple ticks plus break even. So at this point, I think we should be fairly safe. We're either going to make a couple ticks or we're going to make the full 5 points. Flip over to gold real quick. Still kind of same thing there. It's unlikely the market's going to get this close and not come down further to the open. You know, we haven't had a good test of it the whole day. Velko, I'm glad you're watching the stream again. I know, in case anyone doesn't know, Velko helped set up the Discord, so big thanks to him on doing that. Trading lately, trading's been good. I haven't been doing too much with the trade copier. Just kind of been focused on, you know, doing the stream and trading my own account. So I'm going to go ahead and move my stop to at least get a couple ticks here. You know,
target filled.
Cool. So got 5 points there. Go ahead and see my gold trade here. Yeah, so the gold, we had a much smaller position on gold here. So we're still on this swing buy, you know. I don't have a reason yet to get out, so we'll kind of monitor that. So the reason I took this trade, I think my biggest thing, really, it's two things. We have the open of the day here that had not been tested yet. So open of the day, we rallied way up, and the market's coming back down. So as the market's heading down, it has this target, it has the moving average that's below, it has the close that's below, and it has then what the market's doing here, the bulls are trying to go higher, and they're unable to. You know, the bulls here, they think they've got it. I'll pull the chat up here. The bulls here, they think they've got it. They think they've got the bears trapped. They're going to go higher, and then they don't. They fail. They try again. They fail. I almost shorted this bar for the same reason. I think I was kind of out of the room at the time, and I was just coming back, and I saw that bulls failed one more time, and then good looking bear bar. They're probably going to give up, and ultimately, that's what they did here. You know, anytime you see a big bar like this, after multiple attempts like this, that's a give up bar. So the bears, the bulls were long all through this, and then they just, you know, they just got out. So this is both bears shorting, and it's bulls getting out of their longs. So they're selling through here as well, which is what creates this bar. Manny, thank you. Velko, thank you. I'm glad I was able to show, as you know, that trade example. Do I always keep my risk the same? Well, based on the strategy, yes. So if I'm taking a trade like this, we'll always keep the risk the same, um, roughly the same. Um, so if I'm taking like this trade, I'll trade with 5 contracts, and basically I'll just put my stop above that bar. So that was maybe 3.5 points, 3 points or so. So I don't want to risk much more than 5 points. So like if this bar was, I would take this short, but if it was much bigger than this, then I'd hold off. So my risk is the same. My risk is roughly the same based on the strategy I'm using. So if I'm doing more of a scalp trade, like a limit order, like I talk about some limit order trades you can do, then drop your risk down to like 20% of what it should be. Drop it down 20% to what your full position size would be. So like here, if I'm trading, if 5 contracts is like my normal size, then when I'm scalping and plan to maybe scale in, then I'll drop that down to 1 contract, or you guys will see me go down to micros sometimes. So if you have like whatever your like premium setup is, then go for your full size. But if you're doing some like limit order scalping and you plan to scale in, you need to trade smaller, like 20% or less. Zax, great job. Are you using some indicators except EMAs? No. So I just have the 20 moving average and the 200, and that's really all you need. I mean, that's all I need for my strategies. I think anything else might just be a distraction. I can these moving averages give me plenty of context, and so with the information I get from the bars, I can see who's winning, who's losing. And then the moving averages just kind of provide extra context. They provide extra support and resistance. So it's kind of the sweet spot for me. Gold trade still on. So why did we take this gold trade? Let me get rid of some of so the day started off bullish. We had this big spike, and when I get a spike like that, I like to expect a measure move up. Something like up here. So that sets a target for the day. Now, even if we go through all this, the market, this target stays there. So all the funds, the hedge funds, all the expert traders, they know that this target's up there. So it's good that we have a target above. It gives the market something to reach for. So I took this swing trade because that was one reason we had a target up there. Other reasons, we had this double bottom here, so low here, and after that double bottom, bulls got above the moving average, and the bears tried to go lower and they couldn't. And then you got a good looking bull bar. So bears have tried to go lower, they can't. We're above the moving average now with a good bull bar, and we have targets above, so I like that as a swing trade. So bears finally just pushed the market lower, and now we're getting to all these targets I've been talking about, the 200 moving average, the close of yesterday, we're almost there. And you can see all this. There's all this like built up selling pressure through here. And as you gain experience, you can kind of see how that selling pressure is starting to build up, and then you know, kind of the bulls and bears both kind of realize without telling each other that, like, yeah, the market's going down. The bulls get out. The bulls sell their positions. The bears short, and it just creates this big breakout like this. So this is what I was talking about, where I thought we were either going to have a big sell-off, or the market was going to poke through a little bit and then rally up. And it looks like, we're going to be having this sell-off. This is how the daily chart looks right now. And I'll pull up the weekly chart because it's Friday, so the weekly chart is more important on a Friday. So this is how the weekly chart looks right now. The bears want this bar to close as low as it can to just increase the bearishness for next week. How many sellers are there below this bar right now? Probably not too many because of this big tail. Probably more buyers below, knowing that they can like buy here and scale and lower. So there's probably some buyers below here. But if they can close near its low, then the bulls that bought through here probably, a lot of them probably get out. Or how many buyers are there above this bear bar? Probably not too many right now because of the size of this bear bar. But if they can shrink this bear bar, have a big tail on the bottom, or even get a bull bar, then there'd be more buyers above it. So that's why it's important for both sides to try to get what they want by the end of the day on Friday, so they can set their positions up well for the next week. Let me pull the trade back up there. So this gold trade, I have no indication yet to get out. Would I get out below a bear bar closing near its low? Yes. I'm not I'm not so convinced that this is just going to be going up. So, if I have a good reason to get out, then I'll go ahead and just get out. I will, however, go ahead and move my stop up here. So at a minimum, now we're going to just get at least a couple ticks out of it. So this is another swing buy above this. So it's good that it's triggered, because that means there were some buyers above that. So now we just have more people kind of piling onto the trade. So I'm going to move my stop up even further. I mean, I wouldn't want it to pull back to this point. So if it pulls back here, something's probably wrong with the trade, so I don't want to get out there. So this is starting to get more movement up. Once again, I'm going to trail my stop up. I was kind of happy yesterday. I took my first trade on the soybean chart, I had sold, we had this sell off, and I figured there'd be sellers above this bar, so I just shorted and got a scalp. Um, so I was excited yesterday for that. Was kind of a fun trade. It was my first time trading with soybeans. I made a quick video on that. It's it's kind of a boring video, but I just thought it was cool to just trade with like something like soybeans. All right, I'll watch the E-mini for a bit here. I'm going to go to the 2000 tick chart. So anytime we start to see like a trend like this and big sell-offs, I like to go to the lower time frame to try to look for swings on a lower time frame. And it's never going to be perfect. So like, we see this pullback here, this is bear bar, pullback here, bear bar. Sometimes when you take those, you're going to get this big swing down. Sometimes when you take those, you're going to get stopped out. And that's just kind of how it is. But I think especially if you have a target down here. So the target here would be this yesterday's close. So at 55. So there's your target. So if you're starting to sell off, you're breaking down below these lows. If the 5-minute chart's starting to look like this, then like pullback, bear bar, you have a target below, go ahead and try to get a swing down from that. So put your stop there. You put your stop order below to sell, and it would be the same thing here. And I tell you that, and if you go do it, you're probably going to be, of course, probably the first time you try it, you'll be stopped out. But, you just kind of have to let the odds play out. That like I do think like these shorts would be good trades. So like, what's two things you want to be happening? You want the larger time frame to be trending down. You want there to be a target below, so the market has something to have a goal, like it's wanting to get there. And then you want a bear bar after a pullback. It's better if you get it to the moving average. But when you're in this spike phase where it's just going straight down, then your pullbacks aren't going to be very deep. So now, of course, we didn't take this trade because we just got out of one and we were looking at gold. But the market's starting to break out. It's trending down. There's a target below. Pullback, good looking bear bar. I think that's a good short. So looking at this move up now, it's starting to look more likely that we might be able to get up here. So I don't know, we might actually extend this limit order up here since this is going to be a target. We'll see. E-mini has had 1, 2, 3, 4, 5, 6, 7, 8, about 9 or 10 bars now where the high of the bar has been lower than the previous high. So it's almost like it's just stair stepping down. And when you get that, usually the first time it goes above a bar, there's sellers above it. So if this bar went above this bear bar here, there's probably enough for a scalp above that. So if I was to take that, I would, trade at least 20% of what my normal position size is. I'd probably trade even smaller because these bars are starting to get large. So, I might go for more like 10% of my normal position size. So sell here, scaling higher as long as the premise is still valid that we're going lower. So looking at this most recent bar on gold, a good thing is that it closed above the previous high, so it closed above this. But it didn't close above this high over here, so it's not as strong as it could be. If we get a bear bar like this, I'll just go ahead and get out below it. Just peeking over at crude. A lot of overlapping bars, a lot of tails. So I'd be staying out of anything on crude. Yeah, so um, if this bar closes like this or worse, then I'll just be getting out of it. Like I've been saying, one of the good thing about managing your trade. So I don't really need to get out below this bar. It's more of a doji bar now, so it's not enough to get out. I will just go ahead and get out below it, but one good thing about managing your trade is like placing your stop, moving it up like that. The two scenarios. One is that it goes down and reverses all the way down here. If that happens, obviously it's better to just keep your risk small. So by doing this, you're avoiding large sell-offs. You're avoiding large losses, but you're also still maintaining the ability to get a large profit. So I have my stop here. A lot of the times I'm going to be stopped out here. Sometimes it won't. Sometimes it'll just keep on going straight up. So you allow yourself to keep your risk small while giving yourself the chance to still have a large winner. After this trade is over, I'm gonna go and be getting off the stream. So if you guys have any questions, let me know before I head off. Hey, Minnie. Let me pull up the. We tried. So once again, the Bears are trying to sell this off as much as they can to create this bigger bear bar. Just try to spook out the Bulls for next week. And the Bulls, um, honestly, what might happen? This sell-off, I don't think it's not going to stay this tight sell-off the rest of the day. I could definitely see this at some point transitioning into a trading range and then reversing back up and testing this open before the day's over. So I think there's a good chance that we'll still have a 15-20 point move up before the end of the day. So we have 2.5 hours. I think there's a good chance we'll have that move up. Now this is a lot of selling happening here, but under the right circumstances with the right setup over here, I could see that pulling back. Because the Bulls, they don't have to step in until the last 30 minutes. Even if the market gets like all the way down here, the Bulls could step in, and in 30 minutes they could rally it back up here. So that's just kind of a possible scenario. All right, so we got a really good follow through bar here. Yeah, at this point, so if I had traded with 2 contracts here, I would leave 1 contract here and I would move the other up to our target higher up. It's fine to leave it here. I think this has been so bullish. I think I will go ahead and move it up higher. Because like I've been talking about, everyone that's in the market that knows what's going on, they see this target, and that's up there. So I'm gonna leave my stop where it is. So I think, at this point, basically, either I get stopped out here with a decent win, or the market's gonna come up here. So those are the two scenarios now. I'm gonna be right back. Back in 5 minutes. Oh no, might just go ahead and get stopped out here now. All right, be back in 5 minutes. All right, so we haven't been stopped out yet. Um, if the market was to go below this bear bar, then I would go ahead and get out. Otherwise, I'm still good holding on long here. See, the mini took a big plunge here, and then big reversal back. We're getting pretty far below the moving average, but what a lot of funds here will do, they'll um, there'll be a lot of sellers above this bar, and they'll just scale in higher. So, I mean, you can do that as well if you're trading small enough. But, these bars are getting to be pretty large. We're getting near the end of the day on a Friday. It's probably better to just avoid trying to do any trades that would rely on scaling in. So, what's the market going to do here? Is it better to buy this bar or buy above, or is it better to sell the close? I think either side can make money during this. So the market got, so this bear bar, this is the largest bear bar in the trend. It's the largest bar late in the trend. So when you get that, that often means it's getting overextended, it's oversold, and we can see what happened is the market actually bought this close. So it's the biggest bear bar of the day, but the close got bought. It's far from the moving average. It's late in the trend. So anyone that had sold through here, they're saying, wow, I had already made money, and then now I made an extra 13, 14 points in 5 minutes. I'm going to go ahead and just take profits. Well, no, at this bull close, I think people could sell it and scale in higher, or people could buy it and just make money if it goes up. And if it goes lower, we'll probably have enough of a trading range through here that they could buy more lower and just scale in. So I think either side can be making money during this. I would recommend that beginner traders do not do that. Do not trade this. We have large bars. It's large risk. It's near the end of the day. And I think it'd probably get too complicated and have too much risk for most traders to trying to get fancy in here and try to be like selling this close or buying this close. So through here, I mean, to me it was clear what was happening, which is why we took that short. And once it becomes unclear, it's better to sit off to the side. Although that being said, I do think either side could make money if they're just trading small and scaling in here. Zach's had a questions. What about order flow? Are you using it? So no, I don't use anything else. Don't use volume. Don't use indicators. All the information you need, it's in these bars. So no, I don't use anything else. Indicators, they're just another. They're just pulling data from these bars, anyways. That's what the indicators tell you. So I'd rather be able to read. Indicators give you these, these false signals, and now, of course, if someone has a system that works and they use indicators, well, that's fine. You know, I'm not gonna speak against them trying to do that if it's working for them. But all those indicators are just pulling the data from this chart here, and I think people will be better off learning how to trade just the bars themselves instead of trying to rely on an indicator or something else to tell you how to trade. Let's pull up gold. All right, so gold is getting another breakout here. So like I said, I think if I had taken this trade with 2 contracts, I would have basically just be getting out here, because that was around 2 times our risk. Yeah, so if I had traded with 2 contracts, I would go ahead and get up with the 1 here, and I would be holding the other one to go up here. But since I just have 1, I can't really, split it up any, so I'm fine with how I have it here. I'm either going to get it stopped out below this, or it's going to continue up, and we'll get the profit up here. But yeah, I could definitely, if I had multiple contracts, I would be getting out of some on the close of this bull bar, or at our profit spot here. I think this is a good example of, you don't need to trade that large to be able to get larger profits. One contract in gold, $10 a tick, $100 a point. If you can catch a swing trade like this, then you can see what the profit potential is with just 1 contract. So this breakout's good. It's closing above these highs here, and it's closing above this breakout point over here. I'm kind of concerned that we will have a pullback here, and this moving average, it's not going to catch up fast enough for this to be above where our stop order is. We can pull back to the moving average, but the moving average is going to be down here somewhere. The moving average kind of acts as like a net, like a safety net, and I'm wanting this moving average to be like, because right now we have our floor here and we're falling. If we fall, we're going to hit the floor first before the this safety net comes up and kind of catches us. You say, I can't imagine trading without volume profile and order flow. I hear people saying that, like, how could you possibly, they can't imagine trading without a volume. But once again, if that works for them, then that's great. That's I won't tell them to do something else, but that's not how I trade. That's not what I rely on. If you watch these streams, I'll talk about all sorts of different things about what the market's doing, and if you watch it, you'll say, yeah, that makes sense. That's there's only buyers and there's only sellers in the market, and They both have their own goals, and they kind of fight and try to find the fair price, throughout the day. And so if you watch, there's a lot of little things that will make a lot of sense. Uh, while we're here, while we're waiting for this gold to play out, I'll show what we have on the Discord. Um, and we have a couple sections here. We have this just chatting section, which is, I we kind of talk about a few different things in here. Um, but I think post your trades is more popular. We can see, what I want this to look like is for you guys to post your trades in here and show your wins or show your losses, and then you can get feedback from myself. Um, you can kind of get support from other traders, or you guys can discuss like setups you've seen and what you think about it. Sometimes if I'm not streaming, I'll go ahead and post a trade in here. So at this point, this is where I took this limit order buy. I said I expect more up on the E-mini. So let me go to that price. So that was right here. So if you were present in the Discord, then you would have gotten this notification about this. And you could have seen where I had my limit order, and I got filled here. And like I said earlier, I kind of wimped out and I got out at the close of this bar with a small profit. But it would have been reasonable to hold for your scalp up here. So that's an example. Like if you were in the Discord, you could have seen that and taken advantage of it. And throughout the day, if I'm not streaming, I'm always happy to answer any questions about any trading questions you guys have. Also here, this is where we show where when I post a video, you'll get notified here to see, so you can go check out the video. Like I said yesterday, I had fun making this soybean trade. It was my first time trading a soybean future. So that was kind of, it was a good, the trade made sense, but it was kind of, I was just having fun with this, doing the this soybean contract. Anyway, welcome. So looks like Impresso and Christoph joined the Discord today. So welcome guys to the Discord. So Marcus making another attempt down here on the E-mini. Back to our gold trade. We have a minute left. If this bar closes like it does now, I'll get out below it. Right now, it's gold is acting inversely to the E-mini. So as we're having this sell-off, gold is going up. Then as we get this pullback, then gold is going down. So probably going to be stopped out here. It's probably going to be the end of the gold trade. I don't think you have to get out here. You know, we could probably expect a couple legs of a pullback now after we've had this much up and we're far from the moving average. Hey Zax, what do you normally trade? Do you trade the E-mini or do you trade like stocks or Forex or crypto? So probably going to be stopped out here.
Stop filled.
All right, stop filled. So we bought down here for a swing up. We held it all through here. Probably could have held it longer. Probably didn't need to get out there, but I think it's okay to get out. And you know, get out there. All right, guys. Well, I said I was going to be you trade E-mini, gold, and euro. Yeah, you know, I have the euro as well. I don't really take many trades in it. But when I do the futures for it. Yeah, that's we're gonna go ahead and end the stream, and you guys have a good rest of your day.